Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, August 8th, and we had an update in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn up 1.5, beans up 10, and wheat in Chicago unchanged on the day. This adds to Friday's big rally that bounced off the lows starting on Thursday in the 950 mark for November beans, and we're now pushing into the mid 980 range and maybe an outside chance of getting into the $10 range before we get to the crop report at the end of this week on Friday. News today started the day with continuation of good export news for soybeans. Another deal done with China. This time, 246,000 metric tons of new crop beans. Also added on to today was another deal with corn, 162,000 metric tons to Mexico. In total, over the last 7 days, we have seen soy sales that have totaled 2.4 million metric tons. That's a whopping number. Corn sales have been a respectable 581,000 in the last 7 days on these morning export announcement deals. So that is very positive, but the market continues to trade what they expect to be a very, very large crop, if not a record crop. Other news out today, AgriConsult, a private forecasting firm in Brazil, said that it is likely that Brazil is going to need to import 1.5 million metric tons of corn because of their shortfall there this year. That will likely come from Argentina and not the U.S., but that does take more stocks out of Argentina's hands and less in the world market, so that is certainly positive news for the U.S. Speaking of exports, let's take a look at Monday export inspections. This was a mixed bag of numbers. First of all, on the upside, corn coming in as strong, 1.4 million metric tons versus expectations of 900 to 1.2 million metric tons. Soybeans coming in a respectable 972. Wheat, on the other hand, on the low end of expectations, below the low end actually, at 376,000 metric tons. So overall, this was a good number for corn and a solid number for beans at the tail end of the marketing year. Let's switch gears and talk about production, and in particular, everyone is going to be focusing on Friday's USDA crop report, the first official survey of the crop size for the coming year. And so everyone is sort of jockeying around. We're seeing all kinds of numbers thrown out. We've seen a high number on corn of 175 from FC Stone. On Friday, we saw Informa come out with a much lower number at 169. So what are some of the things that are going on? Everyone has been looking at crop conditions that are really, really high, 76% in the case of corn, 72% in the case of beans, and everyone is expecting this to be a record year. But are there signs that this may not potentially be a record year? And I want to talk about some of the things we're hearing from some key weather forecasters and analysts and agronomists out there. First of all, let's start with Planalytics, our weather forecasting team, who does our crop yield forecasts every year or every 2 weeks. If you're a client of Grain Edge, then you're seeing these reports coming out. On July 15th, Planalytics warned that there may be some potential for a trim in yield as a result of high temperatures, especially in the western Corn Belt. We were seeing temperatures in the late July period that were in the lows being above 70 degrees, and they pointed out that if the lows don't get low below 70 degrees, then the crop has a hard time turning sugar into starch and instead needs to use that excess sugar to induce respiration to cool off the plant. So that was a warning sign in July. Here lately in Illinois, the agronomists there have been looking at some field plots and puzzling about the potential for the tips not being fully filled out, that the year is not yielding the most amount of kernels that it could. And what they suggest is similar to what Planalytics suggested, that high temperatures, crop stress during this growth stage may have limited the diversion of sugar away from ear growth and into kernel set. So, while they suggest that the corn crop looks good from a vegetative standpoint, some fields may have disappointing kernel numbers even on plants that continue to look very good. So that is yet another sign. And when we look at Iowa corn yields and look at record years in particular, so I've gone back over the last 7 record yield years, going back all the way to 1986, and every one of these years in the table is a record yield year. What you'll notice about them is the high and low temperatures for June are much different than what we had in 2016. On average, the average high in June was 81.9, the average low 62.1. This year, 2016, the high temperature averaged in Iowa 88.1 degrees, the low 66.5. Those are a good 4 to 6 degrees warmer than these record yield years. So to me, as a statistician looking at some of this data, it suggests that we may not have the potential to hit a record yield year on the basis of these exceptionally warm temperatures in the key development stage. Other things that are suggesting we may not have the greatest crop on record is looking at the vegetative index. This is through August 4th, so last Thursday. And we can see that the change from the previous week, areas in brown are where we're seeing decreased vegetation, that is the decreasing health of the crop. And you'll notice Iowa right smack dab in the middle there, a lot of brown spreading into northern Illinois, northern Indiana, and Ohio. So that is another potential sign that these hot temperatures may have trimmed the yield off of these crops and may not give us the record yield. But that will be left to be seen on Friday when USDA gives their crop report forecast. So let's take a look at November beans and talk about the daily chart here. Like I said, we bounced off the 940 lows, 950 lows from a few days ago, a few trade sessions ago, and we continue to move higher. We bolted higher on Friday, having a very strong close through the weekend. And today, it looked a little shaky. We started the overnight session very strong, gapping higher. As usual, we seem to come into the trade session, the day session, much more tempered. Selling began to take over. But the last half of the session, we saw some key buying, and we saw the market actually close on a solid 10-cent advance today. I would be looking for a test of the 10.06 high that we established back at the end of July. That may be the next testing ground if this market is going to continue to strengthen. And I wouldn't be surprised with the big sell-off we've had, over $1.50 a bushel move in the last 3 weeks, with this crop report coming out, that we might see some shorts start to cover. And I think the 10.06 mark is a realistic price objective here in the short run before that crop report. As always, if you have any questions or want to learn more about how we can help you in your own grain trading situation, give us a look online at grainhedge.com and take a free demo of our trading platform. Tomorrow, please join us because we're going to be talking about trading strategies ahead of the crop report and looking at some short-dated options positions. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.